Stop looking at green candles and look at me. Everyone else is celebrating like we've entered a new era of infinite growth, but as an investor, my job isn't to follow the crowd, it's to look at math. We are seeing a massive detachment between price and reality. I'm 21, and while everyone else is chasing hype, I'm focused on one thing: protecting my capital in a market that's clearly overheated. The world keeps moving, and while the markets are pricing in a perfect peace deal, the energy sectors are telling a very different story. If oil prices stay volatile, the inflation is over narrative gets a reality check. I'm not here to scare you, but to remind you that the market doesn't always move in a straight line. It feels good, right? The portfolio is green, the sun is out. It's easy to get comfortable, right? But successful investing is about understanding the elephant in the room. Buffett Indicator is at 224%. That's not a prediction of a crash, that's a fact of overvaluation. That means there's no room left for error. We're paying premium prices for an economy that's still finding scratches. Now let's connect the dots. We have high valuations, extreme optimism, and geopolitical variables that aren't fully priced in. Surely this is not about being a bear, it's about being opportunistic. Why chase the peak when liquidity is the real superpower right now? History shows that the best plays are made when you have the cash ready to go, while everyone else is tapped out. It's not about fear, it's about having a plan.